I'd like to ask you, Michelle Bosch, what is the biggest risk?
Specifically on the apartment side, the biggest risk that we have right now is that for the percentage of the tenant base that is unemployed or that has lost their job, because it is workforce housing, we buy C properties in B neighborhoods, that if they've lost their job and unemployment, gets cut down, that they might not be able to make their rent payment. So that's a big risk right there. Another risk is that, the economic recovery is longer than expected, and that therefore, we are having to carry, a delinquency or a vacancy, well, right now, not even a vacancy because we cannot evict. So, that we're carrying a delinquency for longer than we want to, you know what I mean? And some of the measures that we've taken in order to preserve cash, is in the beginning, we overfunded in order to be able to have, a well-capitalized asset, number one. But now we've pretty much, canceled any big CapEx project for all three properties. We stopped already immediately because we were coming to the point where we were going to have to make payments, because on two of those three properties, we've syndicated the asset. And so we stopped, payments to our investors just out of precaution. And the properties have had amazing collection rates that I could have paid them, but I continue to hold on to that cash because I want to have a little bit more time and visibility into what happens right now come July, August, you know what I mean? In terms of where we're at, with the economy, where we're at with unemployment, and yeah, so those are some of the things that we're doing. But we hope that by being from an asset management perspective, a first-in-class community, because that's what we strive for. When we come across a C, class asset in a B neighborhood, we want to become the best C there is, such that if there is an economic pressure, that even people that are in a B property right now that might be slightly nicer, that when they have to downgrade, that they're going to downgrade into the next nicest C, which would be us, you know what I mean? So that's kind of how we're going about doing that, is just making sure that we're well capitalized. I'm not excited about forbearance at all. I believe in if I can pay my bills, pay my bills. And yeah, so now our conversation is starting to shift actually with, our investors and into opportunities, because we know that there are owners and operators of large multifamily that bought in the last year, even within the, last quarter of, 2019, that were expecting, and forecasting in their models, rent increases of, 3, 5, 7%. And now those increases are not materializing. I mean, there'll be opportunities out there for us to go and buy again, just like we bought here in Phoenix back in 2008. This time we're going to be buying large multifamily. So kind of positioning ourselves for that, having that, that conversation and opening that mindset to the investor that, that wants to invest with us, that this is the right time to buy, when this happens. And even though everyone else is trying to sell and trying to get out, that it's okay to be a contrarian, that it's okay to, you have to stomach and go against the grain of what everyone else is doing, because we've done it before and it's paid off tremendously. So that's kind of where we're at right now. Yeah.